Hi, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 21st of November 2020. Now, before I switch over to my screen share and walk you through what I'm seeing in the market and, of course, the usual 15 to 20 trade ideas for the forthcoming week, I think it's very, very important to understand the broader context of what's actually going on in the market, the rotations that we're seeing in the market. So I am going to spend probably around 5, maybe 10 minutes walking you through some of those rotations. Hopefully you get some value from this, and hopefully it gives you a better understanding of what we can perhaps expect over the coming week or two. Nobody has a magical crystal ball, as I keep saying, but what we do have with technical analysis is it gives us the risk to reward propositions that we're looking for, and it helps us to identify where the strength is in the market. Couple of things just to note straight off the bat. I'm not a day trader. If you've stumbled across this channel, you've stumbled across this analysis, and you're looking for little 10 cent, 20 cent moves on a stock and timing it on minute time frames, this isn't going to be for you. If you've got a mid-term time horizon, which I would categorize as weeks to months, then you'll probably get a lot of value from this. I'm reliably told that this is one of the best analysis videos channels on YouTube. So although it's obviously growing and it's not got a lot of subscribers yet, I'm told that this is very, very good and I should do more of them. So I will try to upload a bit more often than what I do. I normally only do once a month, just because I'm so busy with my clients and so forth. But again, hopefully you get some value from this. And if you do, please do like, subscribe, all the good stuff. And if you've come through on social media, there's no harm in sharing the video on your channel as well. I'd appreciate it very, very much. So let's dive into the charts and let's see what the market's telling us this. So before I get into this, as always, please pause the video, make sure you're comfortable with that. It basically says that there's not any investment advice and do your own due diligence, because doing your own due diligence is very, very smart. Most of you again know this. I'm registered with the CMT Association. Technical analysis is something that I'm widely known for, and I'm working my way towards my chartered status. And if you get some value from this, again, please do subscribe to the channel, give it a like, give it a share. You all know the drill by now. So as I said at the start, I'm going to just spend 5 minutes just quickly walking over the overall market. I think, maybe just to kind of give myself a little bit of credibility for those of you that are new to the channel, these are the charts that were provided last week and how they performed. As you can see there, very clear rotation out of technology and into other areas of the market. So I've been on top of the market for the last few weeks. I'm getting a lot of questions. Sam, what's happening with technology? Everybody wants to know what's happening with the Netflixes, the Microsofts, etc. So hopefully you get a little bit more clarity from watching this. Now, something that's often overlooked is the US dollar index and the impact that it has on the broader market. Now, hopefully what this chart can show you is there's a very big inverse correlation between the S&P 500 and the US dollar index. What that means is if the dollar is breaking down, the S&P is going up and vice versa. So the question that I'm on top of at the moment is, well, what happens if we get a breakdown here in the dollar index? Well, given the correlation, we would expect the S&P 500 to rally higher than it already has. I'm sure most of us are aware of the good news police with reports of the vaccine, etc. It's all great news for humanity in general. I couldn't be happier because I'm bored out my mind. But certainly I need to keep an eye on the US dollar index because of the importance that it has with the broader market. I would highly encourage you to keep an eye on this chart and look for a breakdown, or indeed if the dollar is to rally from this level of support, that might be an environment where the S&P 500 declines. So although yes, we keep an eye on the broader indices like the S&P 500, I actually think the story is with the US dollar index at the moment. I think the S&P is threatening to break out. we've had a huge rotation recently into the small caps, the Russell 2000. And again, we've got an eye on technology at the moment as well, because there are a couple of the individual sectors within technology, which I will go over in a second, that are very, very close to breaking out. And I think they might be poised to take technology higher and see a potential rotation back into the technology stocks. Now, I like to use the ratio charts to help me keep an eye on the broader market. I'm being asked a lot at the moment, Sam, why is there been a rotation into small cap? So it's very, very logical to me. For those of you that follow me on social media will know that I posted this chart around 2-3 weeks ago, highlighting that the small caps relative to technology bounced clearly from its August 2000 lows. So this was a very logical level for small caps to start to outperform technology, and by default start to outperform the broader market. So small caps over the last few weeks have been exactly where you wanted to be. And you know, this might be the start of something big with the small caps. Again, I keep an open mind to absolutely everything. I don't marry my thesis. So again, I think that's a very, very key chart to keep an eye on. I know most of you watching this won't have the software or perhaps the time or the bandwidth to keep on top of these types of things. But you know, as a professional chartist who does this professionally, these are things that we look out for. We have volatility continuing to drop off, again, given the inverse correlation between the S&P 500 and volatility. When volatility is going down, we would expect the market to go higher. So again, volatility, I would highly encourage you to keep an eye on it. Now, with the technology sector in particular, I think we're building a few bases here, and we know with bases, the bigger the base, the higher in space. I'm sure you've all heard the saying. But with the software names, again, this is a chart that I've been on top of for the last couple of weeks. I think with the base, I think we're poised to potentially go and test this level of resistance. Of course, we need to let price prove itself and break out to confirm the breakout. We don't like to anticipate or call breakouts before the event. But again, it's another chart that we can use to form a thesis on what we think is going to happen. We have biotechs. Biotechs are starting to break out, in my opinion. So again, if biotechs haven't been on your radar, there are a lot of the big cap bios, the therapeutics, etc. There's a lot of real strength in the market, in my opinion, to look at these areas. And I will go over quite a few names in the next 15 minutes. And again, just to go back to the theme that I had with the chart for IGV, I think we're potentially looking at a breakout here in the communications services sector. And if we look at the weightings, it would make a lot of sense to potentially start to look at these names if we get a breakout in XLC. And again, I have a couple of these names prepared for you. Emerging markets is often overlooked. Now, given the makeup of emerging markets, I think it makes a lot of sense, if you're not looking already, to start looking at China tech specifically. I think there's a potential here for emerging markets to really start rallying. When we look at the Chinese ETF, the internet, KWeb, again, we look at the notable holdings, there's a lot of strength therein. Now, just to touch on a chart that I shared with social media on Wednesday that I got a lot of messages on, a lot of emails on, because I essentially called well, I don't know if it's the bottom in BABA at the moment, but it was a logical turning point, and I just wanted to quickly explain that I think Alibaba should be on everybody's radar at the moment. We've obviously had a massive decline in Alibaba, but when we have RSI in a range, now a lot of you will have learned the old trick that when RSI reaches oversold conditions, you need to buy the stock, and when it reaches overbought conditions, you need to sell the stock. Now, what we understand when we look at charts on a professional level is what are the characteristics of RSI and what does it mean? Well, when stocks are in uptrends, they're in overbought conditions, they consistently come back and reach overbought conditions. But with an uptrend, they never reach oversold conditions. Now, I don't tend to use this technique with charts unless they're premium companies. I would consider Alibaba to be a premium company. So when we have RSI approaching oversold conditions, oftentimes these represent good entries into strong stocks, because we know that with strong stocks, they never reach oversold conditions. And that appears to be what's happening here with Alibaba. Now, I've also layered on top the KWEB chart, which also formed part of the thesis that KWEB was retesting the level of support. We had a logical turning point. And when we take into consideration all the available information on Alibaba, it told me that there was a really good risk to reward proposition being offered. And again, don't take my word for it. I don't use the magical hindsight indicator. Go and check out my Twitter or stock twits. And you know, this was posted on Wednesday, and I wanted to explain this because I think there's many of you that don't have that understanding, or it's highly likely you don't have that understanding of what a characteristic of an uptrend looks like. Now, individual names, we're going to start it off with Roku. I think with Roku, we've had a monster week this week. And I think we've broken out. Now, I don't want to get into 13th century mathematics and the merits of Fibonacci, but absolutely, I think we've broken out above $250. And for my work and the way that I approach the market, we have a target now around 369. I don't want to get into the fundamentals of the companies, the valuations, etc. Because again, something I understand wholeheartedly is with growth names and momentum names, valuations oftentimes go out the window. We just need to look at Tesla. Again, Square Inc, significant round number barrier, $200. Again, these psychological numbers are very, very real. And I think we're very, very close to breaking out above $200, which if we look at the trend in Square Inc, it's very, very hard to deny that that's a stock that you want to own. Now, Kirkland's Inc is in an uptrend. Again, we've formed a bit of a base here, and I like Kirkland's above $14. Now, something else that I need to say as well, if there's any disclosures that I need to make regarding existing positions that I own or any recommendations that we've made to our clients, I will inform you. This is one of those disclosures. It's a stock that I own. It's a stock that has been recommended to our clients on this breakout here above $14.50, and it's rallying higher. There's a large short interest in the stock. We have excellent relative strength. And if you are somebody that is buying into the clean energy hype, then that might be a stock that you want to consider. Another disclosure, again, this is a stock that I own. I had the same disclosure a month ago when I last did my last analysis video. I've owned it since we broke out here at 14, and it's moving higher. And I think we get a breakout above $20, which goes back to the round number concept. I think if we break out above $20, then I think CLDX is a stock that has the potential to move higher again. Canada Goose, again, retail name, above $37.50. Again, we're not overcomplicating it here. We've got an uptrend. Looks like we're basing, and again, I like it above $37.50. Personalis has come onto the radar. This is a chart that I've shared with our clients this weekend. We are looking like we're testing the level of resistance from its IPO. So again, I like Personalis above 32.50. I think there's a potential there for it to get moving. Now, to go back to a chart that I shared a few weeks ago on the gaming index, what we're looking for with our work is for stocks to break out on an absolute basis and a relative basis. When we have ETFs, for example. In this example, we've got a breakout on a relative basis. If we get a breakout here on an absolute basis, I think there's a few names in here that are worth considering. We are currently in a bullish momentum range. That is very good news, and I have some of these names prepared as well, but I wanted to go over those charts again. And I think given a lot of these names are likely to be momentum names, I think pen makes a lot of sense. We all know Dave Portnoy by now. Stand by for liftoff if we break out above $78. CRISPR Therapeutics, again, it goes back to the theme on biotechs. I like CRISPR above $112. Chewy, again, I'm sure we've all got pets. Very, very useful company, and we like it above $72. Yeti Holdings above $63. I think we're testing a level of resistance that it's demonstrated in the past. Again, we're getting into 13th century mathematics here, but there's a very logical target here at $76. Nvidia is very, very interesting to me. The reason it's interesting is if we have the semiconductors ETF SMH breakout, which is very, very close to doing, I think you can then start to look towards the big cap semiconductor names, and I think Nvidia probably fits that mold. Again, if we've got semiconductors breaking out, it's very difficult to imagine an environment where Nvidia doesn't get taken along for a ride, and I think Nvidia is setting up for a potential move higher, provided we don't see any massive car crashes in the overall market. I've been asked a lot about Amazon this week. Now, Amazon has done not a whole lot. I think most of us would accept that over the last couple of months. It's in a bit of a holding pattern. But what I just wanted to point out to everybody, and again, we're using 13th century mathematics here, Amazon is very, very capable of doing a whole lot of nothing. It has done it in the past. I think 19 months here of just sideways nothingness before it eventually had a breakout. And, you know, again, we had a breakout on a relative basis and the thing just flew off. So again, I'm keeping an eye on this chart. I think these are the levels to keep an eye on. And again, I'm looking at it on a relative basis. I think if we can get another breakout on a relative basis here, I think that would be the catalyst for Amazon to really start getting going. The reason I watch the relative strength is, you know, if you think about, you know, money managers who are benchmarked perhaps against the S&P 500, they need to find stocks that are outperforming the S&P 500, and that's the reason why that relative strength is such a useful tool. You know, we want to identify strength in the market because oftentimes that's where the big funds and the big money are allocating. We've got overstock here. This plays into the I guess the crypto hype. If Bitcoin breaks out above $20,000, which I think many expect it to do, I think there's some names, you know, aligned with cryptocurrency that I think could be interesting. For disclosure, this is a chart that we shared with our clients this weekend, and I like it above a breakout above the 50 period simple moving average. I think that is a potential high momentum name, and I think it offers a really good risk to reward proposition. Disclosure, I own Peloton, and I am looking at this to compound and to add to my position if we can get a further breakout here. I think we've closed above the 50 period simple moving average, and now we just want to have continuation, and that would give me the confidence to add to my position, and hopefully we can go back and retest these highs. Another disclosure, I own Apple. It's done a whole lot of nothing for the last couple of months there, but I think for those of you that keep asking me about Apple, I think if you build in the 50 period simple moving average, build in a trend line here, build in the AVWAP, it's very easy to make the bullish case for Apple. Apple's not going anywhere. It's we know good stocks over time only go up, and So again, I think it's chopping sideways. It just requires a little bit of patience. I think that would be the message. Nuance Communications. This is a chart that was shared with our clients during the week, and it has broken out. Significant breakout at that. We have RSI up at 77. We've got incredibly good rising relative strength. I suspect Nuance Communications could be one of those companies, given the move towards remote working and no longer having to work in the office. If you go and look at their product, it's actually a really cool product. That's about the extent of my fundamental understanding, but we've had a massively positive reaction to the earnings. So again, it wouldn't surprise me in the slightest, given the beautiful trend that it's had over the last year, that this really starts to get moving again. Snapchat, we like it above $45. Again, we're going back to Fibonacci here, above $45, and I think it has the potential to break out, and it's likely a high momentum name. Fiverr International, again, we like it above 202. Again, we're using these Fibonacci levels. To touch on Netflix, I've been asked a lot about Netflix. Now, a month ago, when I did my last analysis video, I did touch on this chart with Netflix, and I had highlighted the consolidation range. I think there's a huge range here. I think there's 23.5%, and there's a very easy get out. I think if price breaks below the 200 period simple moving average, if you're technical in your approach, then that's the get out. I'm sure there's many of you that are dollar cost averaging and so forth. Again, it's not my preferred approach. I certainly respect it, but for me, I think there's a risk to reward proposition. We like stocks at the lower end of a range, and hopefully it can go back and test the upper end of the range sooner rather than later. Enphase Energy, again, plays into the solar clean energy space. Again, I think we're starting to build a bit of momentum here, and I think Enphase Energy is probably a stock that you want to look at. Pinterest, again, beautiful trend. I've applied a trailing stop loss tool here, and again, we have an upper target here of around $83 as the next target on Pinterest. Nike, we like it above 131. Again, we've stalled a little bit here at these Fibonacci levels, and again, we like it above 131. MGM, going back, I guess, to the chart for the gaming sector and hotels, etc. Again, this is a chart that we've shared with our clients over the last couple of weeks. We've had a breakout, and it has started to move. So if you're in the camp that we've got an economic recovery and hotels are going to come sailing back, then this might well be a name that you want to own. Moderna, approaching the psychological $100 level, and we like Moderna above $100. Makes it very easy to own it, and we obviously have a very easy get out where we can say that our thesis is incorrect. But what we want to see when it moves above $100, we want to see that volume spike. We want to see momentum come in, and that gives us the confidence. Teladoc pulled back recently, bounced off the 50-week moving average. Please note this is a weekly chart for Teladoc. I think if we're above $200, what's not to like? I think it's had a very logical pullback. It's pulled back to a level that we would anticipate a reaction, and that's exactly what we've had. Riot Blockchain plays into the Bitcoin theme, the cryptocurrency space. Again, for disclosure, this is a chart that our members have entered into on this breakout here. It's flagging, in my opinion, and we would expect Riot Blockchain to hopefully start moving again above $6. Again, I don't want to get into the fundamentals. I know there's a lot of controversy with the history of the company, etc. I get all that, but I just look at things from a completely price perspective, and I'm looking at the previous highs, and for me, that's an incredibly good risk to reward proposition. And we also have Carrier Global Corp. Again, disclosure, this was recommended to our clients in a breakout here, and it's rallying. We have had a pullback, but when we have pullbacks and uptrends, they quite oftentimes offer opportunity to either compound on the position or add a new position, provided that these levels are respected. So again, I think with Carrier Global Corp, it makes it very, very easy to make the case for a trend continuation rather than a trend breakdown. But again, we've defined the risk from the outset. If it breaks below our levels here, no harm done, we're out. So if you have got something from the analysis there, as I said, please do subscribe to our channel, share it on social media, give it a like, comment, all the good stuff, and hopefully it can get this type of work out to the masses a little bit more. If you are somebody that perhaps it does struggle a little bit, I guess, with your trading, your investing, your technical analysis, etc., feel free to go and check out our website, honeystocks.com. We provide technical charting research to retail and professional clients. We provide a lot with our analysis. We've got our weekend analysis, which is similar to what you've just watched. We provide trade ideas. We've got our halftime analysis. We also provide a trading community and network. I prefer to call it a network because there's so much, I guess, knowledge and insight within the network and the community that it's no longer just about my work. There's a whole network of professional and retail clients that do incredible things. I also provide charting support on a daily basis. So, with our membership, if you are struggling with a chart, you can reach out to me at any point on our platform and I will provide my chart, usually within a couple of hours. And we also provide full access to our technical analysis program, which has had incredible feedback as well. So if that sounds like it's something that interests you, all you need to do is just go and click on join membership and you can go and sign up on our website. But to give you a little bit of an insight into what it is that I actually provide our clients and members, this is an example of a trade alert that was sent out for plug power. We recommended this above 1450. As you can see, very, very clear instructions. We don't send out text message alerts. We provide at least 12 hours notice for our alerts. And you can go on and you can have a look on our website, because I'm very, very unique in what I do. I log every single trade idea that I have ever put out to our clients over the last 3 years. I wish it was the industry default. I don't see anybody else that does this. And, a lot of the charts have helped our clients and members do some pretty incredible things over the last few years. Just to show you a couple of the messages this week, our options traders, for example, massive win on BLNK this week, but that chart didn't come from me, it actually came from Julie. So it really is an incredible network that I've built up. One of my clients has more than doubled their trading account over the last 12 months, which is utterly incredible. Another one of our members doubled their IRA accounts. Again, just incredible result. And this is the type of, work and community that I've built up over the last 12 months. So if you're somebody that is trying to get away from day trading, or maybe you want to enhance your technical analysis skills, maybe you're too busy to filter through thousands of stocks, and maybe you just like to be part of a group or a community and a network, would probably help in some way. It's only $500 for the year. And as you all know, I have absolutely zero plans to grow the biggest trading community on the planet. I take on limited numbers for a reason, because I'm exceptionally busy on a day-to-day basis. And if I was to have thousands of members, I would not be able to support the network that I have. So feel free to go and check that out. But if you've stuck around to the bitter end here, from the bottom of my heart, thank you very, very much for watching, and maybe we'll welcome you very, very soon. Thank you very much for watching.